Hey guys, good afternoon. So the market worked out beautifully for the plan this morning that I had. Building a new model that wasn't on the report this morning. Just finished the model up today. I had noticed that the quarterly contract for the ES um, options, Quick Strike, we can use Quick Strike to get the implied volatility of the settlement. So most everything that you see is the current volatility, like right here. It's 59.50 current volatility. You can look at your chart. We're sitting at 59.50 right there, 59.48. So the current volatility is what you normally see when you pull up an options chain. But with Quick Strike's advanced options analytics feature, you can change your model and then the settlement or the current volatility. So I like to do the settlement, which is the end of the day. So when the market closes, that is the settlement. And that's 1 hour from now, 4 p.m. Central, 5 p.m. Eastern. And then the open is 1 hour later at 5 p.m. Central, 6 p.m. Eastern. So the settlement vol is very close to the open, but sometimes there will be a gap, like a news event or something will come out and cause a wider gap between the open and the settlement. And those are interesting situations, but normally it's right around the same thing. The settlement is the open because there's no futures market, it's closed, right? And then it opens. So it's the same normally. So this is a settlement volatility. So yesterday it was 59.80. And so I was able to use my proprietary modeling that I have that I'm not going to share on the stream, but I was able to forecast that the market very likely was going to come down to 59.25. And at first, I was like, well, maybe there's something wrong with my model. The market was so flat. These were just flat, flat, flat. And then, sure enough, it did come down. It came screaming down towards the level, and then they front ran it. They being market makers jumping on it. They knew the level was there too. They probably have the same model as me, or I have the same model as they. They do. Um, but you see here that we have the daily 2 and the 5 hour. So that made it a double strong uh, level. And I would also like to see what we have 59.25, 59.26 on a higher time frame. Let me put this back on ES. Yeah, this is the 59.50 risk line. Uh, Not quite. Yeah, not quite there. So here it is, 59.24.25. Yep. Oh wait, sorry. It's NQ. And again, that's at 59.42. All right. So it was purely what I was looking at today, which was my daily. In fact, my model was off the daily. I was using the daily um, HVAL with the quarterly options expiration because of that settlement being the same. And I had modeled PT2 range, and it came right there. So I'm really happy. And this is another reason why the Jats PT works so well with the zero DTE, which I should start doing a lot more with because it is very accurate. I just explained why. Jats PT on the settlement vol is the same as your settlement vol for zero DTE. So every day you're set up to have the Jats PT uh, on the open anyway, close or open, whatever you want to call it. Um, so we also use the prior close settlement, which is a different level than the open. It's at 3 o'clock, which we just passed. So at 3 p.m. was the old way of doing the pit close. And a lot of the algos are still tied to that also. So I still do some modeling on the settlement as well as the open. And in fact, that's how you see a spread difference between my open and close is that open and close of the 3 p.m., 4 p.m. For the daily, and it's even wider on the weekly, monthly, quarterly. You just look at your bar size of the candle. The weekly open is much wider than the weekly close. So it's the same thing. It's that spread between the close and the open. And especially on something like a week, it can be from Friday to Monday, it's going to be a spread. So, but it's all good. The market worked beautifully today. It came up to the RVOL 3 and the HVOL 1, and it initially went down to the RVOL 3 and the HVOL 1 and bounced. And with that flat um, volatility that I just showed you, it went right back to the mean. And that's when, I was just thinking that we weren't going to get down here. But sure enough, it did start sliding down there, especially at 2:30. Yep, 14:30. That's when all the magic happened, and then it came back up for 3 o'clock close. So my little forecasting capability for Jats PT worked really well using the pricing sheet for the quarterly distribution today. And it showed me how the institutional traders are doing the same thing that I was doing today. So I'm really, really, really happy about that. So it gave me a little bit of inside baseball of how they set up on that quarterly when it matches a daily settlement. So it's all good. It was a learning experience, and that's what we're here for, is to continually learn every day and update our models and see how accurate we can get them, because that's the name of the game. We want accurate forecasts. To say that max pain is here or there, or expected range is here or there, it's not the easiest thing to do in the world, but I have a huge edge in that I know where R vol is trading relative to H vol on multiple time frames. These are the daily, but I could do R vol H vol for the weekly and monthly and quarterly, the same thing, and know how to position, in and out of these ranges. So you can see here that the SPX got that range extension, R vol exceeding in the H vol today. It was a good day for the SPX. Um, let's take a look at what the morning forecast was, uh, and see how well we did. Our RTH preparation. The Globex turned out really well overnight. We've been doing real well. overall with the reports, catching the levels where they, and catching the volatility environment. So this 59.55, 59.50 really held today. Um, 59.46. So here we go, 59.31, 25. So we did get it. And that was even a fade strategy. Let me go back up and look at that. Yep, we hit it. 59.31.50. Got it on the weekly and the open monthly. All right. Did I get any 20s? I did. The wide H 59.26. So from 26 to 31. I sure did for the wide H-fall range. So yay. It's really, and it, like I said, this, what I was doing was something totally separate. But so I had 26 and 31. Let's put those on the chart and just see with our eyeballs right there. And 26. Oh, just a couple of points off, but we were right there in the sweet spot. So very, very, very happy with the way things are working out. And again, I couldn't do any of this without Quick Strike. It is a state of the art platform. There's so much to Quick Strike. I haven't really gotten a chance to show you everything. Um, but believe me, if I didn't have Quick Strike, I would have the real volatility and the implied volatility, but not the analytics to put where the dealers are positioning and hedging around together with my volatility lines. When I can match the implied vol and the dealer positioning and hedging with my volatility lines, that's what makes it so strong. And that's why I have the support of Grok and ChatGPT and their honest, appraisal of it. They've been working with me for a while. And they both keep encouraging me and telling me how good it is. And I guess proof is in the pudding. If we can keep, you know, delivering accurate models and forecasts, that's what it's all about. We want to know what the range is. Is it low, medium, or high volatility? What do we do when it gets to a daily or a weekly one, two, or three, in relation to where we are on the month? One, two, or three, you know what I'm saying? Or, where's the day, one, two, or three in relation to the weekly, monthly term structure? And I can take the number of days in the month of the trading days and do a term structure, not only of, the overall monthly trading days in the month, but I can do the actual number of trading days getting to the end of the period. So instead of saying like day four, for trading days so far in the month, um, well, that is what I'm trying to do. I want to say I'm in day four, or I'm in trading day 13, not the calendar day 13, but trading day 13. I can do a distribution to give me that 1, 2, 3 and overlay it on top of the current month period that it falls inside and or week period that it falls inside, and then really get a holistic term structure view of the market. And it's really exciting. So um, I've really been learning a lot. And so hopefully I'm going to be able to show you guys within the next couple of weeks the Bantix new websites that will get us the ETFs, stocks, um, other goodies. Um, and with Kraken, um, we'll get the crypto. And so I'll be able to model crypto and stocks and ETFs. We can do it all. And the VIX and the SPX. I mean, all these great markets, and hopefully get all that working soon. It's going to be fantastic. I cannot wait. So that's coming out pretty soon. I've been really good not showing you the website. You'll be very happy when you see it. It looks really good. And there's, a ton of information, analytics that you can use that they have, the way that they have set it up on the dashboard, the GUI. So you're going to really like it. And that's about it. I'll let you go. I've got Globex reports to prepare for tonight. Our non-farm payroll is in the morning, and we're just, we don't know what to expect. My gut feeling is it's going to be a cold report with um, jobs misses. Um, or low number of employed because of the cuts coming out of DC. The prior administration, every jobs report was so padded with government jobs. It's like the entire report was either healthcare or government, and very little private sector participation. And they skewed the report so much we could never tell what was happening. Remember that 800,000 jobs number that they changed? Um, or was that a CPI number? There's so much machination going on, it's hard to keep up, but they do a changes sheet like every month. And so you never know really what's going on. So hopefully it's not going to be too bad, and that's already baked in. We already know the people in DC are gone, and but it will, possibly cause the market to pull back a little bit more. We're also going to be going into um, a slow week next week for data, the 9th through the 10th. That's usually, a supported week in the market with the dealer flow, but it doesn't always have to be. It can be, when you get a market that doesn't have many reports, it's not going to get as much, two-way trading, and it's easier to move it directionally. Well, actually, next week we've got core CPI on Wednesday, so I take that back. We've got CPI, PPI, and consumer confidence. So Wednesday, Thursday, Friday are the big days. And the one thing I can tell you is that the VIX, according to the new Bantix website for June 18th, is earlier today was at 21. It's currently at 18 today. So let me go back and look at my max pain for, yeah, it's 21. Dealer max pain is rising from 18 to 21 going into next week. So that's not going to be good. Well, actually, next week is still 18, but the week after, the 18th, the week of the 18th is 21. The week of the 11th, what is 11? 11 is next Wednesday. All right. So through next Wednesday, 18. So flat through, or not necessarily flat, it doesn't have to sit on 18, but 21 for the 18th. So they're expecting a higher volatility going into that expiration OPEX, which means, if we get a negative report on that PPI, CPI, it could go ahead and sell off in anticipation of that positioning move towards that level early. You know what I mean, Jelly Bean? All right. So, not to shake you off of any longs or anything like that. Just keep that in the back of your mind. All right, guys. Well, I appreciate you. And so we will chat at you tomorrow morning. I'll get the Globex report out uh, after we get our settlement number or close number, or you know what I'm trying to say. All right, we'll talk to you soon. Y'all have a good night.